Hello everyone. Today we're gonna break down why I took this trade on EU. So let's get started. First thing we want to check is the context we are inside. So if you break this down to the 1 hour, 4 hour time frame, what we're gonna be able to see is here we have our Asia session, and before Asia session open, we have swapped all this high right here, right? So we took out sell stops above this high. We took out a protected high since in the overall we were bearish for that time. So we can expect the price to be bullish and let's say take out this high. Right? So what we're gonna expect if we know we're bullish, that we want to have our Asia session right here. London making the low of the day and continue, right? That's basically the daily cycle we want to anticipate on most of this case. But why? Because that's our context. This one right here is our high time frame range, right? We took out stops above this high, so that's why we get this reaction from here, right? So then we can go to a lower time frame, in this case right here, and we can see Asia to finish, right? So how did Asia close? We know that Asia close is a strong high. Let me mark this up for you guys. Run liquidity, and here there is the structural break, right? So we have to keep in mind that Asia closes a strong high right here. So we know that Asia closed right here. We have our high time frame range. Now what we need to do is to find a key level, right? So we want to go up to the daily, the 4 hour to check our closest key level that we have below Asia in this case, right? Why we don't want something above Asia. The main reason we don't want something above Asia is because close with a strong high. So there are high chances that this high during London will get respected, right? Even if you're bullish, because that's a strong high, right? So we're gonna go to the 4 hour time frame. And what do we see? We see an imbalance fill price action and also an order block. So we can mark up the open. This one right here is the closest point of interest we can get to our Asia session. Remember that key level must be selected from the high time frame, must be unmitigated, and also needs to have liquidity close to it, right? So now we can go back to where we're currently at. So we didn't have any internal range liquidity close to our key levels, so we have Asia liquidity. That's a very huge pool of liquidity. So which type of range is this one, the high time frame? We have our range, no internal range liquidity, creates that liquidity, is swept, and now we go. Which kind of range is this? T2, right? That's what exactly we have. So since we have our inducement right here, we could be able to take a nice short right here during London, right? So if we break this down onto this perspective, we have our high right here. Let's make it purple. And our low right here, right? Why we can take out the low? Because we're coming from a context that we don't have internal range liquidity in our high time frame range. So there are high chances that in a range with our internal range liquidity, a T2, in other words, inducement, is going to form and is going to get taken. We also have Asia that closed with a strong high. So this has high chances to hold during London, right? So now that we have a range, what we can do? Find our high time frame key level. So we go back to the 4-hour time frame. And what can we see? We can see this unmitigated wick right here. And then we drop down. All right. And that's really it, right? Now, there are two ways to approach this range. We can approach this directly, or we can simply wait for confirmation. Now, you don't want to take this huge trade. You want to place your entry right here and your stop loss just above, right? Because it's going to give you a very low risk redeem. But again, there are specific needs that you may want to take these trades, right? So we wait, price comes to our key level and form our QM, run our liquidity and take out a low. So here we could have our T1 type of range. That's a very obvious type of inducement. So we may take out this, potentially come on a POI and then drop. So we got that break of structure right here, and we made a strong high, right? Notice, since we are bearish, every strong high must hold. So we're gonna have our bearish market structure. That's gonna be simply be made of strong high, and strong high until we hit our high time frame target, the inducement of our high time frame range right here. So we break structure. Now, you may be asking, why do you see a lot of three candle formation here, here, whatever, here, and also here? And you might be confused about which one is going to be our protected high and why price doesn't came up right here or here. It's going to be so much question. That's why we use ranges to identify our market structure, right? So now let's break this down. You have a strong high right here, around this liquidity break of structure. So that's our high of the range right here. So let's put a little dot. Let's make this orange right here. So now we have our high of the range. Why do we see these strong highs and strong lows? That's simply internal structure. Market cannot just drop straight. It has to create structure in form of three candle formation and also strong highs and strong lows. That's because the market is fractal. So again, price broke straight, makes a strong high right here around this liquidity break structure, and then takes it. This will confirm our orange range. Now, what can we do is to find our high time frame point of interest. So let's see, what do we have? 4 hours is going to be way too higher. So there is no purpose to check it. Right? So even the 1 hour is way too bigger. So we're going to scale down to the 30-minute. What do we see? Imbalance fill. In other words, a block right here, right? That's our key level. So now we want to go down and see what we have. Right? Now look, this key level is mitigated, right? Why is mitigated? Because price push, test, our key level, drop again. Our key level must be unmitigated. Now there are two outcomes when price comes to your area. The first one will be that simply creates more liquidity. The second one is going to be that now all the orders are going to be inside this whole area, right? Because simple institution push it price back down, mitigate those orders, push back, right? So again, if your key level is lining up with here, you have no reason to anticipate this high to be liquidity, right? There is no build-up for liquidity. So we can anticipate this whole area right here to be our short area. So we can catch a short on top of this point of interest and target our weak low, right? Same thing as we cover inside this orange range. Remember, the market is fractal. So what it's gonna do after price came to our high time frame point of interest and taking out the internal range liquidity? It's gonna take out the external range liquidity, but it's not gonna push exactly like this. It's gonna create market structure. Which market structure is gonna create if market from A has to reach B? A bearish market structure. So what it's gonna do? Let's look. It's gonna create strong high, run liquidity BOS, run liquidity BOS, and also inside. Look, this happened, this one right here happened inside this range, right? You see, it's inside. So then broke another strong high, lower time frame, and even inside. As you can see, our structure is very clearly, right? Then we came down for a high time frame key level, right? After price came to our high time frame key level, it took out a high. So now we have confirmed our high time frame range. This one is red, right? We took out our T2 inducement right here, our Asia low inducement. We came into a high time frame point of interest, and there we go up. So we took out a major high. That's a major swing high because this high pullback made this whole low. All right. So we broke our structure. We made a pullback. There is pretty much nothing here to catch for me because price never actually pulled out the premium or discount, as you can see, right? But that's a pullback. Why? Because price came down and created, as you can see, a strong low. Then price pushed back, broke structure, and again, it's not gonna move just like this. It's gonna create structure. That's how the market behaves. It's gonna create strong highs and strong lows. Then price come into an untested strong high with liquidity just below this external range liquidity right here. And we have our block. Right. You could potentially expect some nice short. Obviously, you cannot target now this low right here or even this low. Why? Because they are strong lows and we are coming from a high time frame key level. And that's very important to keep in mind. So now you can anticipate that this whole push is going to come to an end, form our opposite Quasimodo to confirm this blue range with high chances, right? So we got our blue range right here. Now what's rest is basically to spot our key level. So we want to go up to the forward time frame right here. And what do we see? We don't see nothing. As you can see, this blue range is basically inside this candle. That's way too higher. So we're gonna go to the 1 hour time frame. And what do we see? We see an unmitigated wick right here, right? That's what we see. So now we want to go to the 1 minute to check liquidity. Now, on this case, there is a lot of price action going, right? You see the key level may be tested multiple times. Now, I didn't want to take this whole area right here, and I prefer placing my entry to the key level. Sometimes you don't see me using a lot the mitigation when I have a lot of price action, because if you have a lot of data, it's very easy to miss out. So what I prefer to do, I prefer to leave my key level as this and just watch the entry, right? I know I have very low probable chances if I don't adjust my point of interest to the key level. But I don't want to overcomplicate my analysis, right? But even if you adjust it, as you can see, there is the level that got test, push up. So now this area will be our long area. And look how price respect this area. And also, what is this? A strong low. Run this tree kind of formation, rock structure. So you could refine the whole area to this. But again, in this situation, I felt more confidence to place my entry to the key level or whatever I want to find to the refined point of interest. I will leave my stop loss right here, right? I want to feel my stop loss always on the strong low, on the strong high as I can. Because this has 80% or even more chances to go to take profit if I place my stop loss exactly like this. It's very low probable the price is gonna come down, tap my stop loss and go, right? So I always prefer this. So I rather miss the trade than catch a bad one. Right, so that was my trade right here. So where we should go break even. Now, if you're targeting this high right here, you should put break even after that one. But I was targeting this red range right here. So I prefer to put break even after this high. This blue high gets swept. Right. So we got our major break right here. And price came into an obstacle. An untested high is also obviously liquidity below it. So price formed our opposite Quasimodo, run the liquidity, and take a structure. And now we have a new range from this low to this high. But again, if you're already in this trade, as I was, you shouldn't be worried about catching another entry because let's say your bias is wrong and you place another entry right here. If your bias is wrong, you end up with two losses, right? Remember that job as a trader is to protect and then make your capital. So you should be focused the most to protect your capital at first. Right, so even right here, notice how the price respected that strong low. But why this strong low right here hold? Because that's a strong low. We already took out internal range liquidity coming to our high time frame area and we broke structure. So this low has to hold if you are in the right leg. It's gonna push the price to his final target, right? So that may be a potential entry below this internal range liquidity, right? Then price break right here. We got a new range from this low to this high. And again, which pattern do we have right here? 81. And then price goes to the target. Right, so that was basically my trade that I catch today. That's a nice 105. And here you have a little breakdown of basically everything that happened during this London session. So that's all for this case study. See you in the next one.